You see the headlines about Nepal's economy, maybe a bit of a slowdown here, some rising costs there. But what's really going on beneath the surface, well, it's far more complex and frankly quite concerning.
Mm-hmm.
And that's precisely what we're digging into today. You're here because you want to understand the real story, right? To get beyond those superficial reports and grasp what's truly happening.
Exactly. And we've gathered a stack of recent sources, everything from breaking news and investigative pieces to, detailed economic analyses.
Right.
Our goal in this deep dive is really to pull out the essential insights into Nepal's financial situation and, crucially, connect the dots in a way that gives you a clear, comprehensive understanding without you having to sift through all that material yourself.
Think of this as your fast track to understanding the big picture. We're going to unpack this interconnected web of financial challenges Nepal is facing. We're talking massive money laundering operations, the pervasive influence of the informal economy. It's a lot.
And ultimately, we aim to shed some light on the underlying causes, the wide-ranging impacts, and maybe potential avenues for addressing these issues.
Okay, let's dive right in then. And we have to start with a truly eye-opening figure. Almost NPR 18 billion.
Yeah.
That's the amount uncovered in a recent money laundering bust by the Central Investigation Bureau, the CIB. It led to the arrest of 21 individuals.
And in the context of Nepal's economy, that's not just a large number. It's a really significant shockwave.
Absolutely.
What's fascinating here, or maybe alarming, is the level of sophistication involved. This wasn't simply about hiding cash under the mattress.
No.
The CIB uncovered a really complex system. It involved customs evasion, illegal gold trading, substantial tax fraud, all cleverly channeled through digital payment platforms.
Right. These digital wallets like Sakelo Pay and Paywell Nepal allegedly played a central role. The reports detail how money mules, and you can picture individuals literally moving cash around, were depositing illegal funds into these digital accounts.
Yeah.
Then, and here's where it gets really interesting, this money was disguised, made to look like remittances coming from Nepali workers overseas.
But, and this is the crucial point, the supposed remittance wasn't actually originating from countries like Malaysia or Qatar or the UAE, as the digital records suggested.
Right.
Investigators found it was flowing from within Nepal itself. So effectively, they were laundering illegal domestic funds within the system, making dirty money look clean, like it came from abroad.
It's like a financial sleight of hand, isn't it?
Exactly.
A senior CIB officer described it as financial crime at a highly evolved stage, and it's easy to see why.
Yeah.
Operations like this, if they go undetected, they seriously erode the trustworthiness of the entire financial system.
They really do. And we're talking about some significant business figures apparently caught up in this.
Yeah, the names mentioned.
Indeed. Birendra Saw and Dipendra Saw of DS Traders and Remittance, they're accused of laundering a staggering NPR $2.82 billion. Just those two.
Wow.
Then there's Shravan Kumar Saw of Deep Jyoti Traders, NPR $1.51 billion. Tarlal Yadav of Ria Traders, NPR $1.39 billion. Haram Mahato of Ananda Traders, NPR $1.02 billion. Nirav Kumar Mahato of Nusandia Traders over NPR $840 million.
So these aren't small fish.
Not at all. What's striking is the number of, established business figures caught in this dragnet, allegedly laundering sums from hundreds of millions up to billions of rupees. It really showcases how widespread this issue might be.
And what's remarkable, or maybe worrying, is that many of these individuals operated registered businesses. They weren't entirely underground operators.
Correct. Yet they seemingly failed to adhere to, fundamental financial regulations, or perhaps willfully ignored them.
Which then raises an important question about oversight, doesn't it?
It certainly does. The CIB alleges that the digital wallet companies either knowingly facilitated these activities or were, let's say, grossly negligent in monitoring the immense transaction volumes.
Because many transactions clearly exceeded the NPR 1 million threshold, right? The one that should have triggered alerts, according to Nepal Rashtra Bank regulations.
Precisely. That threshold exists for a reason to flag potentially suspicious activity.
We even have an anonymous official from the NRB admitting quite bluntly that oversight of this digital financial realm has been woefully inadequate.
That's a pretty strong admission. And it points to systemic weaknesses.
Now, if we connect this to the bigger picture, Nepal was recently placed on the FATF Grey List. That's the Financial Action Task Force, the international body fighting money laundering.
Yes, and this kind of large-scale bust underscores exactly the systemic weaknesses that likely concerned the FATF.
So this isn't happening in a vacuum.
Not at all. The potential consequences of being on that gray list are serious. We're talking reduced investor confidence, potentially higher costs for international banking, maybe strained relationships with global partners. This scale of alleged money laundering is precisely the kind of activity that puts countries on that radar.
So where is all this laundered money believed to have originated? What's the source of the dirty cash?
Well, the investigation strongly suggests it comes from the, quote, informal black economy, particularly things like customs evasion, smuggling goods across borders without paying duties, and the persistent problem of gold smuggling.
We've certainly seen those high-profile gold seizures in the news recently. Tons of it, sometime.
Exactly. And the suspicion is that this laundering network provided sort of an ideal pipeline to legitimize the proceeds from these illicit activities.
So the illegal cash goes into digital wallets,
It's disguised as foreign remittance, maybe broken into smaller amounts.
and then it can re-enter the formal economy looking relatively clean.
That seems to be the mechanism, yes. Appearing legitimate enough to be used.
And where does this cleaned money ultimately end up? It's not just sitting in digital wallets, surely.
No, the suspected end use is quite troubling. A significant chunk is believed to have been plowed into land and real estate.
Which could help explain some of the inflated property prices we've seen, maybe, especially around Kathmandu.
It's certainly a contributing factor analysts point to. There's also suspicion it's being channeled into seemingly legitimate businesses, hotels, schools, trading companies, setting up fronts, essentially.
And potentially even making its way into political donations.
That's a concern raised, yes. Laundering provides a way to obscure the origin of funds used for political influence.
That's particularly worrying, as one financial analyst noted. When illicit funds get laundered like this, it sets off a chain reaction. It creates unfair competition for legitimate businesses, right?
Absolutely. It inflates asset bubbles, like we mentioned with real estate, and it can potentially corrupt the political landscape if that money buys influence. It really destabilizes things.
And we should also mention the older informal remittance networks, the Hundi system.
Right. While illegal, it's a long-standing practice in the region for moving money. What seems new, or at least newly prominent, is how digital wallets are now being integrated into these illegal systems.
So providing a kind of high-tech upgrade for moving large sums discreetly.
Essentially, yes. Faster, perhaps harder to trace in some ways if the oversight is weak. And estimates suggest a huge chunk, maybe 30 to 40% of total remittances, still flow through these informal, unregulated channels, digital or otherwise.
Okay, so this multi-billion rupee bust, it really looks like more than just an isolated criminal event. It seems to be a symptom of some more fundamental issues at play here.
I think that's a fair assessment.
To get a broader perspective, let's look at some research. There's a paper, Impact of Corruption on Economic Growth in Nepal, 2004-2017, that specifically examined this connection.
Yes, and what's interesting here is that the study identified a clear negative correlation between levels of corruption and Nepal's GDP during that period.
So more corruption meant less economic growth.
Essentially, yes.
Hmm.
Higher perceived levels of corruption were associated with significantly lower rates of economic growth. It quantifies the drag corruption puts on the economy.
That's a stark finding. And what did the researchers suggest as potential solutions? What can be done?
Well, their recommendations focused on several areas. Strengthening anti-corruption agencies like the CIAA, that's the Commission for Investigation of Abuse of Authority.
Okay.
Emphasizing public education to really highlight the damaging effects of corruption, promoting ethical leadership as a standard, not an exception, and crucially, reducing the government's direct involvement in economic decision-making.
Why that last point?
The thinking is that excessive government intervention creates more points of contact, more potential opportunities for bribes or rent-seeking behavior. Simplifying processes could reduce corruption opportunities.
Right, makes sense. Now, building on this theme of financial integrity or the lack thereof, we also looked at an article called Hidden Crisis in Corporate Economy. This one dives into the issue of manipulated paid-up capital. Now, for anyone listening who isn't deep in finance, could you break down what paid-up capital is and why manipulating it is such a serious problem?
Certainly. Let's try to simplify it.
Yeah.
Think of a company wanting to raise money by selling shares. Authorized capital is the maximum amount it's allowed to raise this way. Issued capital is the value of shares it actually decides to sell. But paid-up capital is the amount of money the shareholders have actually paid the company for those shares they bought.
Got it. So it's the real money that the company has received from its owners.
Exactly. This figure, the paid-up capital, is a crucial indicator of a company's real financial strength and the actual level of investment it has secured. Manipulating it means a company is basically painting a false picture of its financial health.
Which undermines trust, right, for investors, lenders.
Completely. It misleads investors, creditors, regulators,
Yeah.
everyone. It creates instability in the markets because decisions are based on false information. And the article suggests companies use a whole range of deceptive tactics.
Yeah, it details some pretty shady methods companies allegedly use to inflate this figure. It's not just like a simple accounting error we're talking about.
No, absolutely not. The list is quite extensive. Things like overstating the value of shares issued, reporting inflated or even completely fabricated contributions from shareholders, making misleading announcements about capital increases that never actually fully happen,
Okay.
using creative accounting tricks to hide liabilities or make the balance sheet look stronger, backdating agreements to make it seem like investments came in earlier than they did, exaggerating the value of assets the company owns,
Wow.
engaging in murky transactions with related parties like sister companies to create a false sense of external financial support, overstating the value of non-cash contributions like property or equipment, using company funds for stock buybacks to artificially pump up the share price, and then maybe reselling them, and even reclassifying loans as equity to hide debt. It's a whole playbook of deception.
It sounds like a recipe for a financial house of cards just waiting to collapse. And the article even points to some big international examples where this kind of manipulation had severe consequences, didn't it?
It did. Cases like Luckin Coffee in China,
Ah, yes, I remember that one.
Wirecard in Germany, Steinhoff International in South Africa, NMC Health in the UAE. These all involved significant manipulation of financial reporting, often including issues around capital, and led to massive financial losses for investors, huge regulatory fines, legal action, and in some cases, the complete collapse of the companies.
So these serve as pretty stark warnings about the potential fallout.
Definitely.
So does Nepal have laws to prevent this? The article mentions the Company Act 2063. Are there protections?
Yes. The Company Act does have several provisions aimed at preventing these kinds of manipulations. They cover areas like financial transparency, ensuring accurate representation of share capital, and holding directors and officers accountable for financial misconduct.
For instance.
For example, it mandates transparency in financial statements. It prohibits falsely representing unpaid shares as fully paid up. It restricts companies from wildly overstating asset valuations. It regulates things like stock-for-debt swaps, prohibits undisclosed stock buybacks, and holds company officers legally liable for financial wrongdoing. The rules are there, on paper.
But, and this seems to be a recurring theme, the article also highlights a significant gap between having these laws on the books and actually enforcing them effectively.
That's a critical point, yes.
Mm.
The Office of the Company Registrar, or OCR, the body responsible for ensuring corporate compliance, is described as suffering from a lack of resources, technical capacity, maybe expertise.
And maybe ethical lapses, too.
The article mentions instances of ethical lapses compounding the capacity issues, yes. This overall weakness in regulatory enforcement creates an environment where, unfortunately, these manipulative practices can sometimes go unnoticed or unpunished.
It creates opportunity, essentially.
It does.
And the article offers some specific recommendations for strengthening this regulatory oversight, right? It's not just pointing fingers.
Exactly. The recommendations are quite practical. Things like improving the OCR's ability to conduct really thorough audits, maybe using forensic accounting techniques,
Yeah.
imposing much stricter penalties for corporate fraud to act as a real deterrent, increasing public awareness about investment risks so investors themselves can be more vigilant and spot red flags, fostering better cooperation and data sharing among regulatory bodies, the OCR, the Nepal Rashtra Bank, the Inland Revenue Department, so they have a more complete picture.
Makes sense.
Leveraging technology, like data analytics, to identify suspicious patterns of fraudulent activity more easily, and investing in educating investors about their rights and how to actually read financial statements critically.
So quite a comprehensive set of suggestions there.
Yes, aimed at closing that enforcement gap.
Okay, so between the huge money laundering bust and this potential for widespread manipulation of corporate finances, it really paints a picture of some pretty significant underlying weaknesses in the system.
It does.
And this brings us to another report, this one with a very direct title. Major corruption scandal in Nepal exposes deep-rooted kleptocracy.
This focuses on that fraudulent Bhutanese refugee resettlement scheme. Could you just outline what this scandal entails? It was quite shocking when it broke. It really was. And it's a deeply troubling case. It has its roots way back in the 1990s, when a large number of Bhutanese individuals, mostly of Nepali origin, were expelled from Bhutan.
Right, the Lot Sampas.
Exactly. They sought refuge in eastern Nepal, and the Nepali government and the UNHCR provided assistance. Over time, many of these refugees were resettled in third countries like the US, Canada, Australia.
But some remained.
Yes, a smaller group remained in the camps in Nepal. The current scam involved criminals, allegedly including high-level officials, fraudulently identifying ordinary Nepali citizens as belonging to this remaining group of genuine Bhutanese refugees.
Okay.
Then, they promised these Nepalis resettlement in the U.S. and other Western countries in exchange for substantial bribes.
And the scale of this fraud, it seems potentially enormous, doesn't it? Both the money involved and the number of people deceived.
Absolutely. Reports indicate over 100 victims have come forward, stating they paid collectively over USD $2 million in bribes. But authorities estimate the actual number could be much higher, possibly involving over 13,000 people fraudulently sent abroad or cheated out of money over time.
That's staggering.
It is, and so far, cases have been filed against 33 individuals. This includes some high-ranking political figures, current and former senior bureaucrats, and various agents involved in running the scam on the ground. Though there's public suspicion some very high-profile figures might escape serious punishment.
And the article uses the term kleptocracy. For those listening who might not be familiar, what does that actually signify in this context? It sounds pretty bad.
It is a strong term. Kleptocracy essentially describes a system of governance where corruption isn't just, isolated incidents of bribery here and there. It's systemic, it's organized, often transnational. It involves a network, a nexus of political elites, business figures, and sometimes even criminal elements who collaborate systematically to loot state resources, enrich themselves, and advance their political agendas. Often, they use professional intermediaries like lawyers or accountants to help launder the proceeds.
And the Bhutanese refugee resettlement scam, with its alleged involvement of high-level officials and the apparent extraction of vast sums through deception, fits this definition.
The article argues strongly that it aligns with the characteristics of kleptocracy, yes. It points to the systemic nature and the alleged involvement across different sectors of power.
The article even gives another example of how doubly entrenched this might be, mentioning alleged interference by a finance minister in money laundering investigations, leading to the suspension of the central bank governor.
Yes, there were reports indicating that a finance minister allegedly tried to obstruct a money laundering investigation being conducted by Nepal Rashtra Bank. This investigation apparently stemmed from a tip-off from a U.S. agency about suspicious funds.
And when the governor resisted unfreezing those funds,
the governor was subsequently suspended. This, the article suggests, highlights the extent to which powerful political figures may be willing to interfere with and undermine national institutions, even the central bank, and the rule of law to protect certain interests.
it paints a bleak picture of institutional integrity.
It does raise serious questions.
And the article makes a really important point. Kleptocracy isn't just something you find in authoritarian regimes. It can actually take hold even in democracies like Nepal, especially where institutions are still developing or might be vulnerable to manipulation.
Precisely. The relative weakness of democratic institutions, perhaps the incomplete entrenchment of democratic norms and values, can unfortunately create an environment where these kleptocratic practices can thrive, even behind a facade of democratic processes.
So what does this article recommend? How can Nepal tackle this kind of deep-seated corruption?
The recommendations focus on several key areas. First, reforms within political parties themselves, things like more transparency in party financing, clearer rules for candidate selection, greater internal democracy.
Okay, tackling it at the source.
Exactly. Second, strengthening transparency and accountability measures within the government, particularly around things like political appointments to key positions, making sure they're based on merit, not patronage, improving access to information.
Right.
Third, empowering civil society organizations and independent media, giving them the space and protection to play a more effective role in exposing corruption and holding power accountable.
Crucial watchdogs.
Absolutely. And finally, the role of the international community, especially mentioning the United States, in pushing for justice in the resettlement scandal specifically, but also more broadly in supporting the strengthening of democratic institutions in Nepal.
So quite a multi-pronged approach needed there.
Systemic problems require systemic solutions.
Okay, so we have this backdrop now of significant financial crime, potential corporate malfeasance, and deep-rooted corruption. How does all of this connect to the broader economic challenges Nepal is currently facing? We looked at an article titled, Fueling Nepal's Economic Crisis.
Well, the financial misconduct and corruption we've been discussing, They directly contribute to and definitely worsen Nepal's economic vulnerabilities. They erode trust, distort markets, and divert resources.
Right.
The article points, for example, to the dismissal of a finance minister amid various scandals, including alleged involvement in a money laundering scheme and making unauthorized last-minute changes to tax rates in the budget, possibly benefiting certain business interests.
So, illustrating how economic decision-making might not always be driven by the nation's best interests.
That's the implication, yes. It creates a context of uncertainty and questionable policy choices.
Although the mainstream media is credited in that article with playing a crucial role in uncovering some of these wrongdoings, which is at least a positive sign for accountability, perhaps.
It is. A free and active press is vital. However, the article also details some very immediate and concerning economic pressures Nepal is facing. For instance, the Nepal Oil Corporation, the NOC, requesting austerity measures from the government to try and cut down petroleum consumption.
Even after the government had already reduced taxes on fuel imports.
Yes, even after that. The NOC was still warning of dire consequences if consumption wasn't curbed, presumably referring to the drain on foreign currency reserves.
And there's a quote from a climate negotiator pointing out the short-sightedness of just cutting taxes on fossil fuels.
Right, Manjit Dakal. He argued that it's a short-term fix that undermines long-term goals, saying the money spent on tax breaks would be better invested in sustainable alternatives like public transport or renewable energy.
Which makes sense.
It does. And the article argues that Nepal's economy was already in a somewhat precarious state before recent global shocks like the Ukraine war impacted fuel prices. It cites pre-existing issues like a liquidity crisis in the banking sector,
Too much lending, maybe.
largely attributed to overextended loans, particularly in the real estate sector. Also, stagnant remittances at the time, falling exports, rising imports creating a trade deficit, and consequently dwindling foreign exchange reserves.
A tough mix. However, the article does present a counter-argument, doesn't it? That maybe the overall macroeconomic picture wasn't that bad.
It does mention that some economists argued Nepal's situation wasn't dire, pointing to factors like a good monsoon boosting agriculture and the stability provided by the fixed exchange rate peg between the Nepali rupee and the Indian rupee.
So a bit of debate there.
Yes, but the fuel crisis in particular is highlighted by the article not just as a problem, but also as a significant opportunity.
An opportunity, how so?
An opportunity to really accelerate the transition away from imported fossil fuels. Petroleum imports make up a huge chunk, nearly 20% of Nepal's total import bill. That's a massive outflow of money.
The numbers are quite striking, aren't they?
They really are. The article mentions Nepal spent a massive Rs 218 billion on petroleum imports in just a 9-month period recently. That was 82% higher than the previous year, largely due to price hikes, and it was double the entire revenue generated from all of Nepal's exports combined in that period.
Double all exports just on fuel imports.
Exactly. It underscores the enormous potential for savings if Nepal could reduce that dependence. The article estimates Rs 21 billion could be saved annually for just a 10% reduction in petroleum imports.
And the obvious way to do that is shifting transport to electricity, right? Which Nepal generates domestically.
Precisely. Shifting towards electric public transport, battery-powered private vehicles. Yet the article notes that vehicle registration data for Bagmati province, which includes Kathmandu, shows the vast majority of new vehicles being registered are still petrol or diesel, not electric.
So the shift isn't really happening at scale yet.
Not nearly fast enough. There's that quote from Bhushan Toladhar, an environmentalist, warning quite starkly that Nepal could potentially be heading down a path similar to Sri Lanka's economic crisis if it doesn't get serious about maximizing the use of its own domestically generated electricity, especially for transportation.
And he points to policy gaps.
Yes. He highlights the lack of strong policies and incentives for adopting electric buses, the slow development of adequate charging infrastructure, and the need for better management and integration of public transport systems overall.
There are targets being discussed, though, like increasing electric public transport sales.
Yes, there are proposals, like aiming for 60% of public transport sales to be electric by 2030. But the article stresses that the concrete policies, the regulations, the incentives needed to actually achieve such targets still need significant strengthening and implementation. Talk is cheap, action is needed.
The article also touches on other areas beyond transport where shifting away from imports could help, right?
It does, like transitioning households away from imported LPG cooking gas towards electric induction stoves, using Nepal's own hydropower, And also utilizing the large amount of biodegradable waste generated, especially in cities, to produce compost and biogas, which could reduce the reliance on imported chemical fertilizers.
And it connects these potential shifts to Nepal's climate commitments, too.
Absolutely. Reducing petroleum imports, promoting EVs, expanding renewable energy use, these all directly align with Nepal's stated international goals, like achieving net zero emissions by 2045 and increasing forest cover.
Mhm.
It's a win-win-win scenario.
Yeah.
Good for the economy, good for energy security, good for the environment. But, as the article concludes, the necessary political will to act decisively and coherently on these interconnected issues of energy, economy, and environment, well, it appears to be somewhat lacking, or at least not yet translating into sufficient action.
Right. Now, we focus quite a bit on the formal economy, the regulated part. But a huge slice of Nepal's financial landscape, as we mentioned earlier, is the informal economy. We looked at an article. Nepal's informal economy is 38.6% of GDP. That provides some really important context, doesn't it? That figure is huge.
It is incredibly substantial.
Yeah.
That 38.6% figure was the estimated size for the fiscal year 2020-21. That represents over NPR 1.4 trillion operating outside the formal tax-regulated system.
And the average over the previous decade was even higher.
Yes. The average size from 2010-11 to 2020-21 was estimated at over 42% of GDP. So historically, it's been a massive part of the overall economy.
And the research suggests that after maybe a period of decline, perhaps post-earthquake reconstruction boom, the informal economy might have actually grown again more recently. What factors are thought to be driving that?
Well, the researchers speculate that several factors might have contributed to a recent uptick. Things like the import restrictions that were put in place after the COVID-19 pandemic might have pushed some trade underground. Also, the rise in bank interest rates could have made formal borrowing harder, pushing businesses towards informal finance, and just general political instability often fuels informality.
One of the researchers, Shivaraj Adhikari, made that point, didn't he, about policy changes?
Yes, he noted that frequent unpredictable changes in government policy and an unstable political environment tend to foster the expansion of the informal economy, when businesses seek stability and avoid bureaucracy or shifting regulations.
Okay, so what are the downsides of having such a large informal sector? I mean, on one level, it might seem like people are just finding ways to earn a living, being entrepreneurial.
And it certainly does provide livelihoods for many people, that's undeniable. But a large informal economy has significant negative consequences for the country as a whole.
Such as?
Well, first, it distorts key economic indicators,
Mhm.
GDP figures, inflation, unemployment. They don't capture the full picture. Second, it drastically reduces the tax revenue the government can collect, limiting funds for public services like health, education, infrastructure.
Right, less tax base.
Exactly. Third, productivity in the informal sector tends to be much lower than in the formal sector. Fourth, workers in the informal economy often face poor working conditions, low wages, long hours, and crucially lack Social Security, pensions, health insurance, and basic labor protections.
The article also gives a breakdown of which sectors in Nepal have the highest levels of informal activity. Some of those figures are really quite striking.
They are quite revealing. Real estate is estimated to have the highest level of informality at a staggering 99.97%, almost entirely informal.
Wow.
Agriculture, forestry, and fishing also have very high levels, over 96% informal, followed by accommodation and food service activities, hotels, restaurants at around 50% informal.
And which sectors are more formal?
On the other end, sectors like transport and storage, finance and insurance, and information and communication tend to have much lower levels of informality, operating more within the regulated system.
It's interesting how a large informal economy can distort the market, isn't it? It creates an uneven playing field for businesses that are operating formally, paying taxes, following regulations.
Absolutely, it's unfair competition. And the researcher Adhikari also mentioned something perhaps surprising, that even the IT sector, which we might think of as modern and formal, is emerging as a key contributor to the informal economy in Nepal, maybe through freelancing or unregistered small tech outfits.
And it's crucial to remember, as the article points out, that this 38.6% figure for the informal economy doesn't even include the truly underground or black economy, things like drug trafficking, arms dealing, the proceeds of major crime we discussed earlier. That's separate again.
That's right. This is more about unregistered but otherwise quasi-legitimate economic activity. And the open border with India is mentioned as playing a significant role, facilitating informal trade, especially when formal import restrictions are in place in Nepal. People just bring goods across the border informally.
And even events in India can have knock-on effects, like the 2016 demonetization.
Yes, that significantly impacted cross-border informal trade and finance flows into Nepal at the time.
Finally, the article points to Nepal's 2018 economic census. What did that find about the workforce?
That census found that a huge majority of Nepal's labor force, over 62%, is engaged in the informal sector. And relatedly, nearly half of all business establishments in the country were unregistered.
That really emphasizes the sheer scale of this issue. It's not a fringe activity.
Not at all. While the size of the informal economy isn't exactly the same as the percentage of unregistered businesses, those figures together give us a very clear indication of just how widespread informal economic activity is throughout Nepal. It's the norm for a majority of workers.
Okay. We also briefly looked at an article concerning rising cyber frauds in Nepal. Now, while we don't have time for a full deep dive into that specific issue today, it definitely seems to be another angle on these financial vulnerabilities being exploited, doesn't it?
It really does.
And it links straight back to our earlier discussion about the misuse of digital wallets and that massive money laundering bust.
Absolutely. The increasing prevalence of cyber fraud, phishing scams, online investment fraud, hacking is yet another symptom of the vulnerabilities present in the financial system, particularly as digital platforms become more common and perhaps outpace the regulatory and security measures.
So it just underscores the urgent need for stronger cybersecurity measures, both from institutions and individuals, and probably increased public awareness campaigns to help people spot these scams.
Definitely. It's about safeguarding individual savings, but also protecting the integrity of the overall digital financial system, which is becoming so central.
Right. So when we step back and put all these pieces together, it becomes really clear that the billion-rupee money laundering bust wasn't just some isolated incident that grabbed headlines for a week.
No, not at all.
It really appears to be a symptom, maybe a very visible symptom of much deeper interconnected issues that are challenging Nepal's financial stability and economic progress. So as you can hopefully see now, this isn't just a series of separate problems occurring coincidentally.
No, it's much more like a tangled fishing net, as you said earlier. Pulling on one string, say, the big money laundering case immediately reveals knots of systemic corruption, potential corporate misconduct like manipulating capital, the huge shadow of the informal economy, and weaknesses in digital finance security, all linked together.
And ultimately, this whole tangled mess is dragging down the overall economic health of Nepal.
Precisely. We're seeing significant money laundering, yes, but that's interwoven with these broader problems. Corruption at various levels, the potential for widespread manipulation of corporate finances, undermining trust, this substantial informal economy operating largely outside regulatory oversight and taxation, and these vulnerabilities in the rapidly expanding digital finance sector.
They aren't independent problems happening in silos.
Not at all. They feed off each other. They are interconnected elements that really necessitate comprehensive, systemic reforms, not just piecemeal fixes.
So for you listening, the key takeaway here, we hope, is that to truly understand Nepal's economic challenges, you really need to look beyond just the immediate surface-level indicators like GDP growth or inflation figures. There's this complex web of financial misconduct, institutional weaknesses, and systemic issues deeply embedded at play.
And this inevitably raises a really important, maybe difficult question for you to think about after listening to all this. Considering the sheer scale and the deep interconnectedness of these issues we've explored, the laundering, the corruption, the informal economy, the corporate issues, the digital vulnerabilities, what single area, if you had to pick one, do you believe holds the most potential for driving positive change in Nepal's economic landscape?
And following on from that, what would you suggest as the crucial first step in that direction? Where would you start untangling that net?
It's a multifaceted challenge, no doubt. There are no easy answers. But we hope this deep dive has at least given you a more informed and more nuanced perspective on the complexities involved.